Welcome. Welcome to the emerging intersection of smart space and finance, spatial finance in support of climate action. This session is hosted by the University of Oxford, OXI, which is the Oxford Space Initiative, Smart Space, and Insta Associates. To mitigate climate change and adapt, we'll need to closer coordinate between the natural environment and the allocation of finance. This is difficult to do, and it's not being well done today. This brings a raft of questions to mind. How will we hold ourselves and others to account to ensure the integrity between our stated goals and the actions at all levels of governance, whether that's international, national, regional, or at the very local level? For example, how will methane and deforestation pledges at this COP be measured, or will it be fudged? Hopefully there'll be some hard evidence. Who will plan and measure the effectiveness of adaptation? How do we measure in enough detail that allows for self-correction and sanction on a local level? The panel that we've assembled believes that a number of answers can be found at the intersection of finance and geospatial technology. I have great pleasure in introducing the next 2-hour agenda, where you will gain amazing insights from multiple perspectives in this emerging value chain and emerging market. We have a fantastic list of experts who bring great perspectives from their area of expertise. We have Will from Sparkgeo, Christophe, who's coming in from the Oxford Space Finance Programme, we've got Jean-Pierre coming in from Geotree and Mantle, Laura Ann, who's a top 50 leader in space tech, and then Beth Burks, Director of Sustainability at S&P. And finally, for some closing remarks, we've got Mark Francesca, Associate Professor of Strategic Management at the University of Oxford Said Business School. So next, I'm going to hand over to the different speakers to give a short 1-minute introduction, a more comprehensive introduction than I've just provided. And then we'll move into a series of 6 to 10-minute presentations from each of the speakers. And then we'll have a panel discussion where we can really dig into the key issues that of this emerging sector and how it's going to develop and solve some of the problems that I've highlighted above. So with that, I'll pass over to Will to provide a 1-minute introduction.
Hi there. Thanks very much, Nigel. It's a wonderful opportunity and an exceedingly prescient event. My name is Will Cadell. I run a company called Sparkgeo, where for the last decade, we've been helping tech companies make the most of geospatial technology. I live in northern British Columbia and love spending time in the mountains and forests of the Canadian Rockies. My team is spread across Canada, and this year we started a new branch led by Alistair Graham in the UK. We started that operation for 2 reasons. One, there's a ton of talent in the UK, and 2, we saw that even from here, there is a need for modern geospatial technology in the finance sector. And we felt it was very important for us to be much closer to the City of London. So that's me. I'm very excited to talk on this panel. Thanks again, Nigel.
Pleasure. Christophe?
Thanks, Nigel. Hi, everyone. I'm Christophe Christian. I'm standing in for Professor Ben Caldecott from the Oxford Sustainable Finance Group, who unfortunately got called away last minute for other duties. So I'm the innovation and impact lead at the Oxford Sustainable Finance Group. We're a research group and in the University of Oxford under the Smith School of Enterprise and Environment. And we've been working for the last couple of years on sustainable finance related challenges and questions more broadly, but very much on the data side and what type of data is needed to really align the financial system with global sustainability. So that's our background, and we've been doing a lot of work also on geospatial data, on space-based data, as part of the Spatial Finance Initiative, which we established together with the Satellite Applications Catapult and the Alan Turing Institute. And I'll share some thoughts on why we think this is so important later today. Thank you.
Thanks, Christophe. Jean-Pierre?
Hi, good afternoon, everyone, and good to be here on this esteemed panel. I am the CEO of Geotree and also president of Mantle Labs. Both companies use satellite imagery, slightly different focus, I would say, for each one. Mantle Labs focused more on like a fintech offering, so using satellite imagery to make credit scores and insurance products for farmers. And then Geotree is more on the monitoring, reporting, and verification of carbon and nature-based projects. So great to be here as an Oxford alum, St. Anne's 2009, you know, look forward to having a conversation later today. Thank you.
Thanks, Laura.
Hi, everybody. Thrilled to be here. I'm Laura Ann Edwards, and I specialize in innovation ecosystems with a focus on the intersection of space, open data, and impact. My checkered past includes commercial solar, many years in media and branding, and in mentoring a wide range of startups. I'm a NASA Datanaut and delighted to be here today as a member of the Oxford Space Initiative. That's it.
Thanks so much, Laura. Mark?
Hello, everyone. Good afternoon. Mark Ventresca. I'm a faculty member at Side Business School and a fellow of Wolfson College. I'm really happy to be here today, too. I think the COP26 has been coming at a critical moment, and this panel lets us explore a set of issues that I think are extremely timely and interesting. The massive volume of data coming from satellites, the implications for climate, and the efforts to understand spatial finance in the language that Christoph has introduced to us already. I'm also really appreciative of Nigel bringing together such an eclectic group of people. Many of us have ties either in the Smith School or the Said School at Oxford. Others are venture entrepreneurs. Many are alums. So it's really a pleasure to be here, and I'm looking forward to learning a lot with the panel. And back over to you, Nigel.
Thanks, Mark. No, and I think Mark, Laura, and Will get joint first prize for dialing in from the west coast of America and Canada. So
oh, right. Well, actually,
so
all of us, Will and Laura and I are all in the west coast of the North American continent. Laura and I are in Silicon Valley, coming to you live from 5:30 in the morning, Silicon Valley, and Will from a little further north. So great to be here.
Thank you. Beth will be joining us at the top of the hour, so she'll do a little introduction there, but she's the Director of Sustainability and Finance at S&P. S&P is probably a name that you're all very familiar with in their position as a provider to the financial sector, a huge provider to the financial sector. Right, so with that, let's dive into the juicy content. And Will, over to you.
Thanks very much again, Nigel. Yeah, so I want to talk a little bit about spatial analytics to provide some context for this discussion. The internal debate kind of roils on in our industry. What on earth is GIS? What is geospatial? Is spatial special? In many ways, this is kind of a ludicrous and very human argument over kind of a needless classification within a relatively niche environmental industrial sector. But when I think about geospatial analytics, I'm thinking about repeatable measurements made with a geographic component. So I'm thinking about satellites looking at our planet, taking pictures of the ground. I'm thinking about fixed buoys in the Atlantic measuring pressure and temperature. I'm thinking about measurements that have a geographic component. They are about place and places. And these measurements also have a temporal component. We can understand a sense of history and thus change. And that is the crux of what I see as geospatial analytics. Because these measurements tell a story about the character of our landscapes. We're thinking deeply about landscapes changing and the quantitative measurement of that change. When we think about geospatial analytics at Sparkgeo, we generally do so through the eyes of our clients. We're a services oriented organization. Perhaps we're being asked about economic activity in a region. Maybe we're measuring the number of shipping containers rolling through a port or an intermodal hub. Perhaps we're being asked about urban trees across Canada, and we're listening to open data portals and repositories, and those numbers changing over time. The point is that resources and impacts can be measured either by asking open data sources, by listening to Internet of Things, IoT networks, asking the crowd, or watching from space or other aerial platforms. My personal background is in environmental remote sensing, which I studied at Aberdeen University. You might notice I don't have a North American accent. I've got a funny British accent. Traditionally, remote sensing was a pretty manual activity. We would measure the static features of an image, perhaps for the purposes of mapping. But with the advent of new space companies, the availability of cloud compute and ready access to algorithmic technology to run on the cloud, remote sensing has become a place where we're much more likely to measure changes than we are to measure statics. We're measuring the dynamism of a system instead of those big, heavy static features which remain the same. We're looking overtly for differences. And what's interesting is that we used to think of those things, excuse me, as noise, and now we think of those things as the content. And that is why geospatial analytics have become so important to the discussion around spatial finance, and why it's so important this week and last week to be thinking about geospatial analytics within the context of COP26. Because we are measuring this notion of ESG. We can measure natural features to get a sense of the E, the environment. We can measure human activities and impacts to get a sense of the S, social. And we can look through time to determine if the G, governance, is demonstrating positive or negative results. And we can do this in a deeply quantitative manner. This is not being influenced by external forces. This is simply measuring readings that we take from the sky, looking at the ground. Really, there are very few genuinely independent mechanisms to measure planetary impacts. Financial reporting is the subject to variations of national reporting requirements, regulations. But when forests have been logged, concrete poured, land disturbed, or lakes emptied, sensors orbiting our planet can measure those changes in a quantifiable and repeatable manner, and we can measure them across the globe. Now, there's a great deal of work to be done to make use of the fire hose of data coming out of the sky. When Google put 30 years of Landsat onto the cloud, it amounted to about 1.2 petabytes of data. Now, there's somewhere in the region of a petabyte of data flowing out of the sky every day. Every single day, we are capturing the equivalent of 30 years of Landsat. It's an astonishing data flow. But just because we have data doesn't mean we have the technology. It doesn't mean we have the information. The technology to meaningfully parse that data into human understandable products is still being written. I would argue that there is a business chasm between those who have questions about our planet and those who have the technology to respond to those questions. I am so excited about this technology because it is absolutely necessary right now. We have the right tools available at precisely the right time, and it's up to our community of digital geographers to listen hard to the finance, government, and development communities to enable us to build those tools which allow us to meaningfully measure our planet and inform our future decision makers. I think this is such an important time for us, and we should really be dialing in. So the key messages I want to provide to this community is that we never had this opportunity before. If you think of the complementary assets that are in front of us now, we have satellite remote sensing, but we have a plethora of new satellites in the sky. This kind of armada of microsats has grown enormously. So we have all the sensory capacity. We now have the technology, we have the cloud to, within fiscal realities, undertake infinite compute. And we have 3.5 billion GPS devices strapped to the hands of our population across the world. That's 50% of the world's population is location enabled. Those three data points never existed. So if you think as those two things have grown, suddenly we've got this overlapping area in the Venn diagram that is geospatial analytics. It never really existed before. So we have this opportunity to undertake highly repeatable geographic analysis that used to be kind of one-shot deal scientific projects, and now they can be undertaken at an incredible cadence and within the realms of sort of technical boundaries that companies like mine are working on. We can now deliver products which tell you a story about landscapes and how they change, and that is the key to being able to provide robust ESG reporting independent of financial statements, independent of anything other than what we can see from the sky. So we have tremendous opportunity, and I think now is exactly the right time to be doing this kind of work. That's all from me, Nigel. Thank you very much for the opportunity to introduce myself and talk a little bit about geospatial analytics.
Oh, thanks, Will. No, it's a lovely summary. I think from some of the conversations that we've had together, it's that ability to look over the fence and see what's going on, which is just remarkable. Before, you'd require thousands of feet, tens of thousands of feet on the ground to do some of the work that's now possible that you can do from drone or from satellite. Whether it's and I think that sort of power of the technology that's the force multiplier whenever we think about, can technology do something unbelievable, and that to me is the 10x moment or the 100x moment, which is so fascinating.
You're absolutely right, and I think it also plays into this notion of countries doing their part and understanding if different countries are doing their part. There's a definite opportunity to just check up on how people are doing and compare that to the reporting opportunities.
Nice. Yeah. So one of the other things I was talking to, I won't mention their name. I think they'd be horrified if I did. But they're a large asset manager, very, very successful asset manager, and they even admit to themselves they're slightly a little bit behind the curve in technology. But the reality is that there is a gap between, if we look at a classic adoption curve where people say, hey, this is a really nice new bit of technology, I want to use it. Think mobile phones in the 1980s, one or two people have it, now everybody's got them. Geospatial, if you look at it in the financial sector, it's right at the beginning of that curve.
Yeah.
And I think what we see in these at the very beginning of a curve is this wonderful interaction between academics, inventors, technologists, trying to really have a feel around, well, what's going on here? Why is industry not working well with the technology? Why is finance not coming into the technology? Why aren't we using it in the right way? And I think that's what Christoph and the team are trying to do at the moment. And I think that's a nice segue into how he's thinking about it and how we're trying to bring this technology along the adoption curve. And it's not just along the adoption curve for the sake of it, it's to do really interesting and powerful things to help us make a world that responds faster and quicker to climate change. Christoph.
Thanks, Nigel, and thanks, Will, for laying out really nicely and comprehensively, I think, the power and the potential of geospatial and space data we're talking about today. But I'll indeed try to link it back to the the financial services sector, the financial industry. Why are they today particularly, or should they be particularly interested in this type of data and technology, and how can this help them take more informed climate action? Because we're all here in light of COP26 in trying to fight climate change as they put it. But unless we make sure that the data sets that we have as an industry, as a community, is used by the right institution, the right way, the right time, we're not driving a climate action at all. And the financial services sector is increasingly a super powerful stakeholder that can shift the millions of investments needed to invest in more sustainable or climate resilient infrastructure or mitigation infrastructure. So how can we make sure as a sector that the metrics and the analytics we develop is fit for purpose for them? So to do this, I think we need to understand what's happening in finance, in green finance right now. And let me just share my screen to go through maybe a couple of really quick high-level slides. I think what we're seeing right now on finance and green finance in particular, and I think it's been echoed last week at COP26, particularly now that it's been hosted in the UK, there was a big emphasis on the role of finance, both public and private, on how we can support the COP agenda. There were big coalitions announced of asset owners, asset managers that were committing to net zero, that are committing to use their capital to drive a climate, or a climate action agenda. But I guess the way we see it, there's kind of three key drivers that are more and more making financial institutions think about green finance or sustainability. First one is obviously kind of the financial consideration. So we're seeing that, or everyone is starting to see that the losses of the impacts of climate change are becoming more and more prevalent. There's both physical losses from infrastructure being damaged or houses being damaged from increasing frequently storms and hurricanes, but there's also losses due to regulations being put in place that are gonna curb pollution or emissions of let's say oil and gas or other type of polluting sectors, which means that these companies, if they continue operating the way they are less likely to either have to pay a lot more for their pollution. They're more likely to just be stopped in their operations, which is causing impacts on the stock prices of these companies, of their valuations, which in turn is causing a financial risk of portfolios of many asset owners, many banks, and many pension funds. So there's increasingly financial considerations into play, which is causing green finance to be much of a thing. Secondly, and we're seeing again this at COP last week, is that financial regulators are taking action, or they're talking about taking action. In the EU, there's a green taxonomy being developed. In the UK, the base and treasury are going to make climate risk reporting mandatory over the next couple of years for the biggest financial institutions, as well as the key listed corporates. So we're seeing that that regulation is actually driving a lot of need from the reporting side, at least, for better information on particularly climate risk. And finally, we're seeing that many customers are asking their banks, they're asking their pension funds about the way their money is invested, about the way that their savings are contributing to climate change, or they're actually being used to fight climate change, or being invested in more sustainable renewable technologies, and be part of the solution rather than the problem. And this pressure, particularly coming from younger generations, is they're the customers of the banks and the pension funds, which is again making them a lot more interested in green finance more broadly. Now, what we believe at Oxford, or I think more broadly, is that for green finance to become effective, or to really integrate sustainability thinking within financial decision making, you need to understand what's happening on the ground, and really on the bottom, from the bottom up at the physical asset level. A lot of reporting and a lot of kind of analysis at this point still happens on a company level, or is very much top down, without really understanding the underlying physical assets that companies own, where they are located, which risks or hazards they're exposed to, which pollution they are causing in the local and global environment, and how this kind of aggregates on portfolio or company or portfolio level. So to really understand these risks, impacts, and opportunities associated with climate, with ESG, with sustainability more broadly, you need to understand this in a bottom-up way. And this is inherently, you know, we're talking about spatial information, location-based insights that inherently can benefit from some of the benefits and the value that Will talked about in terms of geospatial data and satellite-based analysis. So what we coin, or what we call spatial finance, is inherently you know, it's about mainstreaming geospatial data analysis in financial decision making. It's around applying a spatial lens or an asset level lens on a whole range of kind of, let's say, use cases in finance, to do this in a much more granular way and therefore in a much more robust way than is currently being done before. Because we do have indeed the wealth of data available from geospatial and space. But if you look at what financial institutions typically have available right now in terms of ESG data, it's often relying on corporate disclosures, on self-reported information, which is not even mandatory. So it's patchy, it's inconsistent, etc. So there's no data out there right now, but the data for financial institutions is typically not good enough for what they need to do, and particularly if we want them by 2030, by 2050 to actively reallocate capital and drive change. They need a lot more better data, and they need it now. So this is really the core value proposition, we believe, of geospatial data, to provide a kind of bottom-up asset level, physical asset level based insight that allows any institution to aggregate really their impacts, opportunities, and risks in a lot more of a robust way, depending on what they need to do it for. And I think another point to mention before I close is that when we talk about finance or the financial sector, for starters, there's not such thing as the finance sector. There's so many different types of financial institutions. There's so many types of subsets of, even within, you know, a bank, there's different types of bank. There's within an asset manager, there's different types of asset managers investing in different types of financial instruments. And they all have very different kind of, or they all have relatively different needs, and they will need data about slightly different things in a slightly different manner. So there is a big, I think, need and a lot of work to be done still for the geospatial sector to fully appreciate the breadth and arguably complexity, but equally, you know, the breadth of opportunity within finance across these different institutions and their range of use cases that we need to tailor the data and insights on. We released a report a couple of months ago around the state and trends of spatial finance. And while we're seeing already quite a few spatial finance applications coming online, and we've got a couple of great examples on the panel today, there's still so much untapped potential from the financial industry side of what they need to do and what they're doing, where they can really benefit from geospatial and asset level and space-based data, particularly when we're thinking about climate action and actively allocating capital to more sustainable solution. This can range from mission aligned investing to understanding liability risks or verifying indeed disclosures of companies or countries, to even tracking, you know, transition plans, transition commitments across a range of issues, not just climate, but equally on the nature and biodiversity agenda. So there's so much. I guess the message here is that there's so much opportunity in the sense of the breadth of use cases and the breadth of types of financial institutions that, you know, there won't be a one-fits-all solution, but that means there's an awful lot of things that we can develop, but we need to tailor it to the uses and the needs of the financial services sector. And then just really, I guess, finally to close, is with the Spatial Finance Initiative, we're now hosted in the Center for Greening Finance and Investment, which is a kind of UK government-backed initiative to help actually, again, mainstream climate and environmental analytics in financial decision-making. And the way we try to do that is very much around not per se providing the data, but actually helping financial institutions understand how to use the right data sets in the right way for the right use case. So there's a big angle of kind of capacity building, awareness raising, or standards influencing and delivering best practice, which is another piece of the puzzle that we'll need to really bring together the space community, the geospatial data community, as well as the financial sector to drive the COP26 and net zero agenda. So there's many things that we need to do, but I think we have all the pieces of the puzzle in place. We just need to lay it, and that's it from me, Nigel.
Christoph, thanks so much for that. I think it's an absolutely lovely summary. And anybody who hasn't read the report Christoph was referring to, we'll try and drop that in the chat later on. Or if you visit the Pavilion site, we've posted that there as well. And there's my favorite picture in it. I think it's on page 32 or something. Is the adoption curve of different geospatial technology through those different segments of the finance sector that Christoph was referring to. So we get to see, on the one hand, on the large adoption end of the curve, you get to see some of the great work that the insurance sector has been doing. They've been using satellites for quite some time now, looking at perils, but now they're really taking it to another level. But they've been using it roughly for 20 odd years to a certain degree. And then at the far end of sort of back on this entry level of low level of adoption, is stuff around lending. How do we use spatial finance to lend, to make lending decisions? And like all things, new technologies and its disbursement into the market, you'll find that there's already pioneers who are doing exactly the thing that you want them to be doing on a small level. And that's very much where John comes into it. He wears two hats. One hat is on Geotree, which they've just launched, but also in Mantle Labs, they've been doing some fascinating things there, which they've been enabling both lending and also insurance-based work. So without further ado, I'll pass it over to John to give us a look on what is possible, and also what new markets can you take it to which previously weren't getting serviced at all?
Yes, thanks a lot for that introduction, Nigel. And I think that Will and Christoph have, done so much already. I'm not sure if there's much left for me to say, but I think the easiest way for me to start is to kind of tell you, the audience, about my journey into spatial finance, let's say. Something which I guess, takes me all the way back to Oxford, when I, was fortunate to study development economics and have professors such as Sir Paul Collier. And, these lecturers introduced me to concepts such as poverty traps and the lack of access to financial services, for example, which plague billions of people, particularly in agriculture in developing countries. But anyway, I'll get back to that topic in a second. But my journey from Oxford actually took me, into a bit of a detour, I guess, into the dark side, so to speak, as an intern in Goldman Sachs, vice president at Citi, where I was trading agriculture. And this is where I guess I kind of got my first taste of using satellite imagery specifically, and things like NDVI to model crops globally. So like corn and soybeans in the US, maize, corn in South Africa, wheat in Australia, and the like, to actually get a view in terms of the production side of things, and take views on the market, the futures markets for agricultural commodities. So this is something, I think where, we saw a direct application, I guess, for what we could see from space to the financial markets. Is probably one of the most direct examples you can get. But anyway, whilst I was, trading at, Mercuria, which is one of the largest commodities traders in the world, I actually met the co-founders of Mantle Labs, because we had this issue of clouds in the satellite imagery, where, obviously if there's a cloud in the image, it's pretty tough to see what's happening on the ground. And I think I actually asked Christoph, or one of his colleagues at the Satellite Applications Catapult, if I'm not mistaken, if you could connect me with a startup who've actually solved that problem with regards to the clouds in the image. And this is where the chaps at Mantle Labs came to my office and showed me the groundbreaking technology that they had developed, which essentially was taking all the satellite imagery marrying it with some pretty advanced AI processes to get a global view of the Earth. And how they had actually applied it was to, allow financial institutions like banks in India, for example, and one bank which had an $8 billion annual loan book to farmers. But back to the issue which Paul Collier and the colleagues at Oxford had identified, there was a lack of data around a lot of these farmers. So I think you had 120 million farmers, most of them smallholders in India. But unlike farmers in many other countries, they didn't have financial records or production histories for them to have a credit history or profile based on. So Mantle Labs was able to actually take that satellite image, but also, the banks didn't want satellite imagery per se, they wanted the outputs. And the output in this case was a credit score for a farmer at a particular location, anywhere in the world or in the country. And this unlocked access to finance to many farmers and allowed for them to get out of that trap that I had I'd been taught about, in my time as a student. Similarly, Mantle also developed in partnership with, the leading reinsurers like Allianz Re, index insurance product, which again was using satellite imagery to make, a probability of claim calculations possible for reinsurers, so they could go and insure farmers in a cost-effective manner versus having to send claims assessors or doing expensive crop cutting experiments as are done in many countries. Here we can just use the satellite data, but also leverage the archive of imagery going back decades to actually get a good handle on the risk in a particular location for the reinsurers. So this is where the whole concept of agri-fintech, I guess, came of age in a way, because, here we're actually leveraging, the technology, the satellite technology, but also financial innovation in a way to unlock, access to finance at scale globally. And I think, it's quite easy to forget that, we have, I think globally around 500 million farmers, working the lands, and they actually directly contribute to around 2.5 billion livelihoods via their households and immediate relatives. So I think, that was something where we saw the pain point, but equally now, as Nigel just described, we have this Geotree joint venture, which we just launched at COP last week. And here we have another kind of industry pain point in terms of the need to scale the voluntary carbon markets. And when I say voluntary carbon markets, this is distinct from the compliance markets like we have in Europe, where, companies like energy companies have to be part of this, emissions trading scheme. Here we have companies who are going out and making net zero commitments. And obviously after looking and seeing, all they can do within the operation themselves, then also look outside and see, okay, how can we leverage, different projects in parts of the world to also try and meet our commitments. But I guess one of the key pain points in trying to scale these markets is around how do we actually monitor what's happening on the ground. And this is a key problem that, obviously in terms of scalable solutions, satellite imagery, and the current cloud processing capabilities, which were discussed by Will earlier, that's where, it's essential to have a scalable solution, because this is a market, which we need to remember is projected to grow from around $1 billion this year to potentially between 50 to 100 billion by 2030. But to actually, have the infrastructure in place for investors, the community overall who are, given the urgency and the critical nature of these projects, to give them the confidence. This is where we can leverage the technology. And I think this is exactly what we're doing at Geotree, which we launched last week at COP. So, to make a long story short in a way, hopefully via, slightly a biography that I've given you, but you can see the journey where and how satellite imagery, as Christoph has just said, can be applied to different industries just within finance. You have banking, insurance, asset management, trading, and now I think with the voluntary carbon markets, we have another exciting, potential and growing, customer base. And this is exactly what we need to be focusing on, I think, as a sector. Anyway, thank you very much for your time.
John, thank you for that. No, that's a lovely explanation, and we wish you the best of luck with the launch of your new joint venture. That's fantastic news. So, in a sort of time-honoured sort of in an Oxford way, we always like to say, well, okay, we're talking about one particular thing, but then let's look outside and let's look at the bigger context and ask some just difficult questions. As we all know, if we stick to a narrow industry perspective, we might miss out on some of the bigger trends or waves which are about to hit us. So with that in mind, we've got Laura Ann Edwards, who's going to speak to us now for a little bit to really position what we've been talking about in the bigger picture. Laura, over to you.
Okay, hi everybody. Let's see, sharing screen. Oh, here we go, share. All right, okay. We've been telling ourselves a comforting story about climate for some time now, that we are in the age of miracles and that some brainiacs somewhere will manifest amazing solutions to fix all this climate stuff, right? We've all heard it. But where will these solutions come from? Who will pay for them to be developed? In a recent article, I asked the readers to imagine if in all human history, no one had yet explored the oceans. Imagine if our first proverbial toe in the water was a mere 70 years ago, but we had the technology of today with which to exploit and explore it. That's very much the situation for space. The whole planet is converging on space at the same time. Space truly is the ultimate innovation lab, and 70 plus years of space programs have yielded untold numbers of inventions that have changed our lives. In fact, if any of you listening, look around the rooms that you're sitting in and catalog what you can see, even what you're wearing. A very high percent of that is likely using materials, technology, or was made using a manufacturing process developed for the space industry. I believe that it's time for a massive, transparent investment in the things humans will need to thrive in space, not just survive, thrive. It's not a zero-sum game in terms of space versus Earth. It's possible to be thoughtful and invest in projects that can be co-developed or applied in both settings. In fact, climate is the perfect storm and test of our collective will. Humans can still do really big things, and smart space is one of them. So I ask, how do I make it, why is it not going forward? Uh-oh, there we go. Let's see if it'll do it down there. There we go. So climate change, can we invent our way out of it? Okay, can we data our way through it? No, there's no magic pill. There's no one magic alternative energy technology or planetary thermostat that we can turn on. With the third era of space programs upon us and the excitement around finally having a commercial sector and a marketplace, what are the opportunities? I see roughly 3 buckets of climate action: cure and reverse, cope and remediate, outsource and relocate. So what can space do uniquely or better than any other vertical? My colleagues on this panel have already done a masterful job discussing the business and essential role of geospatial data in terms of information and better models to allow us for the first time to have comprehensive Earth observation data and witness climate change in real time. The opportunities for the investment sector in the geospatial realm are massive. And I would include within that everything from satellite hardware and software to debris mitigation, ground operations, and the AI to make sense of incomprehensibly large amounts of data being generated. So if geospatial has the lion's share of current investor attention, and rightly so, it's fairly straightforward how Earth observation can support climate action, data, communication, sensor relay to help catch bad actors and support good land use practices. What are the other opportunities? Let's talk about other. What are the innovations that are on our roadmap to being a starfaring species, or at least to appropriately exploit the resources between here and Mars? And which of those can have direct IP transfer back to Earth-based solutions and returns? None of these are unique to space. They all are equally mirrored as efforts here on Earth. I would call out particularly obvious ones of energy and water, right? We have massive advances in both of those technologies here on Earth, but there's not enough knowledge transfer between the sectors, between the space sector and between terrestrial development. There's not support for the startups in the terrestrial sector to have access to the space market and vice versa. Let's see. The zero-sum game rhetoric pitting Earth against space is the ultimate isolationism, and it has to stop. It's much better to cultivate the synergies and move quickly to safeguard our planet. And I would also call out that this is also innovation and investment into process in terms of things that are dual use. So I deliberately list colony governance as an example, and that's not necessarily something for the investment sector, but it is something to invest in now, to think about in both sectors. And that's an example of where space can be prototyping solutions that can then be, we hope, cross-pollinated back on Earth. So it's not purely a technology game. The great news is that the IP goes both ways. There are amazing advances in both sectors, and we need to improve knowledge transfer. Much like the commercial aerospace sector, which does a balancing act between defense contracts and scaling commercially, space investors can now choose projects with both a space and a terrestrial application, potentially lowering their risk and increasing returns, not to mention perhaps manifesting more favorable timelines. This might bring an entirely new flow of venture funding and intellectual property licensing. Personally, I'd like to see a cluster of Earth space tech venture studios and modern research parks to streamline that knowledge transfer and monetization. So particularly here at COP, let's think about what near space exploration can mean for life on Earth and how smart space investing can be a critical component to a holistic approach to addressing climate change. In other words, it's go time for the impact investing sector to embrace smart space. Thank you. And stop sharing.
Laura, thank you for that.
Sure.
Did exactly what it said on the tin, and really, again, brought us up another level to think about space and our position in spatial finance, the use of that technology in the bigger industry, or the biggest sort of space tech industry. And I always find it quite remarkable that if we can make the more exotic side of space, whether it's the Bezos or the Musks, who their rocket launches on the one hand seem somewhat, shall we say, they can seem as somewhat childish or chest beating at a moment when the Earth needs some more considerate climate focused action, that actually a lot of the tech that's coming out of that, whether that's going into the financial system for better observation, which can make smarter decisions, or it's using that technology of growing food in hostile, zero gravity environments and using that same technology to create food in more hostile or caged and insulated environments on Earth, I think is so important. And I think this process of adopting geospatial technology as well as other spatial technology, there's a nice interplay there. The more people can get excited by space, the more normalized it can be for your particular sector to say, actually, this means something to me. So from geospatial, you know, we've now got cars. We're looking at a future potentially where we're going to have autonomous vehicles. Well, that involves a lot of space, knowing where things are at a particular time. Incredibly important. So no, thank you for that.
I was just going to say that the truth is the IP has been leaking out of the space program from the beginning. It's just now it's our first opportunity to involve independent investing into it, right? So NASA, I love NASA, you know, my beloved NASA, but it isn't very good at telling the story of all the ways it is changing lives. It's pretty good at getting you excited about going out into deep space and to the moon and beyond. It's not very good at telling you the little bit about the thing that made the hoodie that you're wearing, right? How all those pieces. And because the commercial investment sector has the opportunity to play, they can look at that and peel off things that are useful in general in a commercial application, but also specifically to support progress in climate, like things like membranes, right? Filtering systems, 3D printing. These kinds of things are absolutely at the cutting edge and are in both areas. So I look forward to the panel.
Perfect. Well, on that, the next person, Beth, who comes from S&P, I think the interesting here, we talk about something like NASA and NASA's huge budget and power to buy and to build and to research things. In many ways, you look at somebody like S&P, it's a huge organization, and they have the ability to put money that most small and mid-sized companies would only dream of into long-term planning and building products and services that perhaps people don't want to buy today or didn't want to buy 2 years ago, but want to buy today and then want to buy, and increasingly so in the next 5 to 10 years. And I think Beth's team is very much, you know, part of that frontier spirit where they've been building a number of different services, which sometimes people didn't want when they first made them, but they had a view of the future of how things were going to roll out. So I don't want to steal Beth's thunder. So Beth, if you want to introduce yourself, I know you were up in Glasgow. You were busy. You couldn't join us at the very beginning. But if you'd like to give a 1-minute introduction and then roll into presentation, that would be wonderful.
Sure, absolutely. Hi, everyone. It's a pleasure to be here. As Nigel said, I'm up in COP26 in Glasgow. So please forgive if there's some background noise while I'm speaking to you, but I'm really pleased to dial in for this because it's a topic that I care immensely about. So I work for S&P Global. I work for the rating agency within that. And really, you know, we're a huge company that has many different divisions, but in a nutshell, what we do is we take data, information, and turn it into intelligence so that investors can absorb that into their financial decision making. So we act as a financial service provider to the finance sector. And I got involved in the spatial finance initiative led by Oxford Smith School a number of years ago, really because of the link to sustainable finance, which is the area I specifically work in. And really trying to understand, you know, how can we unlock this potential of space technologies within the sustainability agenda to address things like climate change. So I'm going to talk a little bit about the work we've been doing and just set the scene a little of how, you know, why we're kind of particularly focused on this and what we think the future is going to hold for the industry. So just let me pull up my slides. Yeah. So that's me. So within S&P Global, we have a new brand that launched this year called Sustainable One, which is sort of the house and the face of all things we do around sustainability within our organization. So really, I want to just start with this chart because I think it kind of puts things into perspective. This chart is basically showing the number of ESG-related regulations around the world.
Just give Beth a couple of seconds there. She's obviously having Wi-Fi challenges at the moment. You just bear with me. I think that let's give Beth a bit of time to check back in. But one of the things that I'd like to say, actually going back to that chart while she's trying to get in, is that I was on the other side. I was on Beth's side of the table previously when I used to work at The Economist, and then also at the Eurasia Group, which were both information providers, one for geopolitical and one from economic data to financial institutions for some years. And one of the things that we always found is that actually one of the biggest ways for organizations to do things was regulation. And that, you know, so often you can have brilliant ideas about how the world should look and how you would like it to look. But then when it comes down to it, it's that regulation where they wish to have, where you wish to have a new technology that answers a very specific question. So for example, it could be some years ago, it was the scenario analysis for different economic impacts. So there we are, we've got Beth back. Beth, I was just keeping the crowd entertained with the importance of regulation, of how it spurs innovation. So,
absolutely. Yeah, so I think, yeah, it's just to say that the TCFD for these regulations have been voluntary for the last number of years. So they were released in 2017, but now there's a shift of focus to make them mandatory. And I think the voluntary period has been where we've been allowed to kind of experiment in terms of how to implement this. And what the TCFD has been asking companies to do is to disclose to the financial sector, to investors, exactly what they're doing around climate change risk. And there's a number of types of risks and opportunities that could be affecting companies, as we may know. So some of the sort of transition side is around policy and legal risks, technology risks, and so on. But I want to focus today a little bit on the physical risks of climate change, because this is where we're really starting to leverage geospatial technology, geospatial analysis and satellite technologies. So geospatial data. Over the last few years, S&P Global has been developing data sets for investors to use, all to do with where physical climate risks will occur and to what degree. And this sort of relative ranking of the risk exposure helps investors and also our credit analysts uncover where there might be particular risk exposures in the companies that they're either invested in, if they're investors, or looking at from a credit risk perspective within our agency of credit ratings. And here, you know, here's a couple of maps just showing you that data. These have all been derived from climate models. And I think, you know, what's been improving recently in terms of the science is the downscaling to a regional level, the various different climate risks, including heat waves, water stress, wildfire, and so on. And what we've been doing at within ratings is we've been using these data sets that have come out and that we provide as an organization within our credit rating analysis to uncover, you know, I'll give you an example. So a number of years ago, PG&E, which is a Californian utility, defaulted after following wildfire risks of its transmission lines. And, you know, one of the sort of, I guess, ideas of doing this type of analysis is to try and figure out, you know, where these risks could occur elsewhere in all the utilities and companies that we rate. And so we've been doing a lot of work on this space. We've now applied this kind of analysis to sectors with fixed assets like airports and the utilities. We've also applied it to structured finance transactions, which is where you pool mortgages together. So we've been looking at it in sort of real estate mortgage space, and continuing to expand our analysis around how different physical climate change risks could impact credit. And therefore, you know, once we have that enhanced knowledge, then we can have an engagement discussion with management to make sure that they are also aware of these risks and also implementing mitigation strategies to, you know, prevent another PG&E example happening. The other way we've kind of been using satellite data and AI technology is to uncover future risks. So this is a research paper that I put out at the start of 2020, which looked at US water utilities. And we rate 1,600 US water utilities from the public finance space. So a huge number of utilities across the United States. And what we were doing was we were looking at land use data derived from Landsat satellites, which now is, because the technology costs have come down so much, it's quite readily available and easy for us to use. And we were looking at the link between different ecosystems and the financial ratio that we use within the credit rating. That sort of indicates to us, you know, the willingness and ability to pay back on the debt that they borrowed from investors. And here you're saying the output of that model. We used a machine learning algorithm because there's a lot of attributes that we could, that we know are related to credit, and a lot of attributes that we were looking at from an environmental perspective from the Landsat data. And really, the findings were basically thus. Some of the most consistently important features predicting the, or associated, correlated with the all-in coverage ratios of these water utilities were to do with ecosystems. So actually there were two ecosystems that we uncovered to be fairly material, and that was evergreen forests and snow-capped mountains. And from a sort of instinct perspective, you know, you think of evergreen forests and snow-capped mountains, and you do think of pristine water, and so there seems to be sort of a common sense, you know, understanding that then maybe we are uncovering something fundamental here. But ultimately, you know, all of this stuff is still quite experimental, and you know, we looked at 2 years worth of data, 1,600 water utilities, but in order to be really sure that there is a consistent link, given the fact that it is still ultimately a correlation-based analysis, you know, we need to keep redoing these kind of studies and work to make sure that we can prove that use case for satellite data within as a new data set to explore credit risk. And ultimately, you know, these two ecosystems, as we all know, are heavily vulnerable to climate change and causing all sorts of issues already today within the utility sector. So maybe I'll pause there and turn it back to you, Nigel, to see if there were any questions.
Beth, thanks so much for that. That was lovely. Really insightful and good to. And thank you for sharing with you know, what you guys have been up to there. And it leads on to some wonderful questions for the panel discussion, which I think we'll roll into now. I'm going to kick off the kind of panel discussion. This is for everybody, but as you're on screen, I think sort of take it now. This is from Luca Badello. He says, how do we break the barriers of culture and language that exists across the sector, spatial analytics providers and financial service sector, so to increase trust amongst cross-sector stakeholders and accelerate collaboration? A long one. Beth, do you want to grab that first?
Sure. So in finance, we have a lot of acronyms, a lot of jargon. Same in the space side, same on you know, climate science. Here at COP, they have their own way of speaking about climate from a negotiation perspective. That is also very difficult to understand. A lot of 1.2 this, paragraph 133 that. So I think, you know, in all of these kind of discussions, it's about networking and meeting people and creating those bridges. And that's why, you know, as an organization, we've been part of this spatial finance initiative, and why I continue to have conversations with people from different sectors. Christoph is fantastic at making introductions there, so we can start to sort of bridge that gap and build those use cases internally, because ultimately, you know, we are the potential users of that information, and it has to be relevant for our client base. And so understanding exactly what the data sets mean, how not to misuse them, because there's a lot of potential misuse because we're still not, you know, we're not climate science experts ourselves. So, you know, you have to have a lot of dialogue to try and unpack that. But I do think that it's possible to do. There is plain English, and we can use analogies to make that understanding flow between the two groups, or three groups, or however many groups you want to have on these projects. But yeah, you do really need to speak in person and spend time with people in order to sort of innovate. And I think that's really fundamental.
Really interesting. Does anybody else have hands up who would like to, is it got anything that they would particularly like to add to what Beth just said there? John?
Hi, Nigel, I'll just quickly add, I think, you know, yeah, Beth, you know, puts a, you know, great perspective there. And I think from the startup side, it's always good to have, you know, people, especially with finance industry experience in there, to really, you know, break down that kind of jargon, you know, barrier, I guess, to a certain extent. Because, you know, I think the advantage we have from the space side is that, you know, as Beth, you know, nicely showed, there's a lot of visual representation of those data, right? So, you know, you can always relay what output is possible. You know, people don't need to understand the underlying plumbing necessarily to get to that output, but the end product is kind of clear. But I think what really is missing a lot of the time is understanding of the customer side in terms of what the finance industry needs, right? So I think if you have a startup and to have co-founders or people in there who actually do have a decent experience in industry, I think that also, you know, acts as a big potential facilitator in bridging that gap.
No, that's interesting. It kind of oh, sorry, Laura, after you.
That's okay. I was just going to say that one of the issues around climate action writ large has always been that it affects everybody everywhere. So nobody or very few are doing anything about it. And it's hard to explain. It's hard to differentiate the efforts or the progress. And so with this type of granular data that is so place specific, there's an incredible opportunity to tell highly localized stories, and, you know, by sector, by place, that really means something to all the stakeholders in a particular part of the world, including in a very provable, understandable, non-jargony way, the effects of climate change right there in their city, their town, their backyard. And I think the more that we task ourselves with explaining that from, you know, the conference to the financial sector, because we all think in ecosystems, but people live their lives where they are, where they have businesses. And so learning to re-explain it in a very localized context, I think will go a long way.
Yeah, I think that notion of nomenclatures is so important. You know, speaking as the geospatial person, when we broke into the tech sector, you know, they use the word scale and we use the word scale. We mean different things. We mean maps and they mean traffic, and that's interesting. But the notion of both of those senses of scale is deeply relevant to what we're talking about in terms of climate, because to Laura's point, we all sort of experience ourselves locally. But climate has this scale that is global. I mean, so our impact and our consumer habits have a global impact. You know, perhaps buying a computer here has an impact in a a rare earth mine somewhere in Asia. I mean, and that's important for us to track and understand, and then be able to sort of understand from a local level, oh, what impact do I have on a different part of the planet? But also on a broader level, what impact does the consumption of all these machines have on our planet writ large? So so this notion of nomenclature is really interesting, and this notion of being able to see on various different scales is also really interesting, and both are deeply relevant to this discussion, but also deeply geographic as well. So I think Luke's question is also very prescient around how we cross those chasms between sort of geospatial and finance and climate, how we communicate more effectively.
I also, I guess, want to add a couple of points on the culture and language piece. I think, yes, there is a big gap. I think it's complicated probably at both sides. Finance is huge and complex. Space can be seemed complex. I think actually is the less complex one in this equation. But at some point you have to meet in the middle, right? And I think there's a lot you can, from the geospatial side, we can do to actually learn about the financial services sector, about what they want and need. There's no lack of webinars or events or conferences around sustainable finance, around green finance, and half of the time they talk about the lack of data or what they need in terms of data. So there is no lack of content or opportunities out there to meet the sector and speak with them, learn from them. And as Beth said, it's about building those networks and talking to each other. So I think that if you want to go into this sector, there's ample opportunity. So just go for it. The second thing I think that we're seeing, and we have it on this panel, which is actually a really nice evolution, is on the one hand, financial institutions or financial service providers are starting to hire and recruit data scientists, geospatial data scientists, remote sensing experts. So they're starting to build a capacity in-house to actually interpret what our sector or what the geospatial sector has to offer. And then, as John mentioned, on the flip side, if you want to go into this sector, hire the sector expertise. I think something that the space sector, Earth observation analytics side, in a way, often gets stuck in is we can do so much with the Earth observation data for all industries in many different ways. But to really become good in something specific or for a specific industry, going in that depth requires an understanding of that sector, merging with other data sets, and really, knowing what the customer needs and which format they need it in. 95% of the time, they won't need a map in finance. They will indeed need a metric or a number. So embracing that and just going for it. I think there's often, at least in some engagements we do, when you talk about, space technology is great because of this and that, there's often still a so what question that remains unanswered, right? It's all well and good, satellites are out there, but what does that mean in the day-to-day operations of a credit risk analyst? What does it mean, when you're doing engagement with a company? What does it mean if you've got a portfolio of, 5 different industries, and you're trying to, decide if you buy or sell on in 30 minutes time, whatever that you have. So there's still, I think, from our sector or from the space sector, I don't know which sector I belong to nowadays, but the answering the so what question in a language that is understood by finance, and I think it's absolutely doable. And I think the finance sector is opening up more and more to the notion of why spatial finance is relevant, why geospatial. So there's an open door in a way. You just have to walk through it.
Well said.
Do you think, and from a sort of tangible, what does that walking through it look like? Where have you seen it done best?
I think John's walking through quite strongly, but I think there's probably a couple of ways, and actually there's also different, I guess, tactics or strategies in terms of route to market. You could go to a bank directly to try and sell your analytics, but that may often not really work. But you cannot equally work with the numerous intermediaries and data providers, aggregators, or existing analytics providers in finance that also have no or limited geospatial or EO capabilities. S&P is building it in-house, but they're quite big. There's a lot of other firms that are looking at it. There's a lot of smaller or medium firms. There's a lot of very specialist investment advisors, etc. as well. So there's also actually quite a vibrant intermediary industry, if you like, that you can plug in to, rather than going into a bank directly and trying to navigate your way around the right department, etc. So I think there's numerous way in as well. And there's different companies that are approaching it in different ways, and there's no one size fits all strategy. I think for each company, it'll be different for a Planet, it'll be different for a Sparkgeo, it'll be different for a Geotree. But there's, from a kind of data consumption ecosystem perspective, or data intermediary ecosystem, the finance sector is a really established. They thrive on information and data. They know how to handle it in a way. There's many people providing it, so it's finding your right fit, which will be different for each organization, but it'll be there.
Yeah, I think that's really interesting, and it reminds me slightly of. I like going back to the beginning point of Beth. A lot of it's about good networking and getting amongst people and having those conversations. And it slightly reminds me of back in the days. So when you look at this sort of CFA, for example, is one of the most difficult qualifications to get, but also one of the most prized in the financial world. If you look at their list of things that you're taught in the CFA, I don't think there's going to be a section on geospatial data at the moment. Equally, when political risk analysis was in its infancy 20 years ago, there wasn't a section on that in their studies as well. So there's almost like a key indicator. At what point does spatial finance, when's it on the CFA or the CIMA or the IMC qualification list? And once you're on that, you've won. You're in. You're mainstream. You're adopted in full use. And in some ways, if people are taught extremely well in particular areas, and there's so many lists of things that they have to cover, it's a very comprehensive education program. There is a sense of, well, why would I look at this other piece of data I haven't been taught to? And that's quite a difficult thing. My regulator, and I've been asked to look at this. I haven't been asked to look at this bit. Am I going to get prizes for doing this? Or actually, is it a bit risky doing that? And I think that crossing that barrier, that cultural barrier, is an important thing as well, to say, actually, you have permission. And I think in some ways, in some of the hedge funds, that's why they've been using geospatial data for really quite some time, is because that they're so incentivized to find an edge to make more money, that actually that's why they've been using it there. They've been counting cars in car parks for years. So to get a view on the economics.
I think there's also worth noting that we have an enormous amount of data, but I still think there's an information gap. I think there's a lot of data coming out of the sky, but it comes in the form of pixels, and pixels aren't necessarily easy to use for a lot of people. It's kind of lumpy data. It's telling you a story about spectral reflectance, and you need to interpret that story in a meaningful way into a product that that can be understood by particular market verticals. So there's that translation layer. I mean, it's like I look at my computer. I'm not reading assembly language. I'm looking at applications that tell me certain things that the assembly language is dealing with inside the machine. We're pulling assembly language out of the sky, which tells us what's happening on the planet. We still need to interpret that those pixels, that change in reflectance, into something that's meaningful to the community. And I think those people who have that capability to do the interpretation don't necessarily, at this point, understand the questions which are most pertinent to either the the finance community or the climate community. And that's the piece that is really hard right now, and that we're solving. We have a lot of data, we have a lot of questions. How we answer those questions with the data, I think, is still very much up for the business community and the scientific community to address. And I feel that's where a lot of the effort's going into it. And I think John's team is looking at a series of those questions and trying to cross that chasm. Absolutely. But I think there'll be lots of other questions also that need to be addressed by the community. So tremendous opportunity for those who are willing to have conversations on on both ends of that need to translate.
So that's interesting. So let's dig into this a little bit more. So on the one hand, you've got lots of data that's coming down from new satellites, but there's a sense that actually it's not being used at the moment, even by the Johns and the Beths of the world who are actually at the forefront of it. So with that in mind, what do we see? What's the new pieces of data what are the questions that we want to ask, that we want to answer next? Where do we see the provision of services going in the next couple of years, 2 or 3 years?
Yeah, it's an interesting one, Nigel. And to a certain extent, I feel like, the space industry, especially the Earth observation side, has always been a bit of a solution looking for a problem to a certain extent, right? We've had these satellites up there for decades. I mean, it's nothing new, right? And we've been collecting these data. So I think, we're almost at the kind of new phase now where we are seeing some of the end applications. But, to be honest, I think we're still only touching the surface, so to speak, or scratching the surface. And even within the industry, we're trying to solve that issue. You saw probably yesterday, Planet purchased Vandesat, right? And that's a company specializing in insurance based on soil moisture readings, right? So, even the upstream, remote sensing industry is trying to find the end applications and potentially looking at acquisitions to try and bridge that gap. So, what's the answer? I could only speak from the perspective of, seeing the increase in interest in things like nature, for example, right? And, there's a question on the voluntary carbon market. So I'm going to touch on that to kind of answer that question as well. So here we have essentially, companies, who need to be matched to, who are matched to projects, around, say, forestry or agroforestry or regenerative agriculture, or even blue carbon is starting to get some attention. So, you have the channeling of money from those companies into these projects. And that's essentially what the marketplace kind of is. It's not a physical construct, but it's almost just it exists kind of in the metaverse, to use current terminology, I guess. But anyway, so I think here we have these projects, and it's all about how can we leverage what we see from space to make sure that these are actually taking place. There are things like additionality, there are things like permanence that need to be adhered to. So here we have the perfect kind of technology and a potential use case for the remote sensing technology. So, I think there are going to be many other applications that come up, especially as we move to a realm where we're going to have hyperspectral satellites, coming online, hopefully in the coming years. People talk about mining, for example, and prospecting, as an application. There are challenges in a lot of these industries where you have large incumbents who probably need to be taken on a journey as to how you can use that kind of, new technology. But equally, these new companies in the modern, especially in the last few years, everyone is looking for an edge, right? And looking to innovate. They have their internal R&D budgets, but they're also looking to see what their neighbor's doing. So what we actually saw at Mantle is once you get one of those essentially beachhead clients, so, for example, the input companies could be, crop input companies could be one, and there are really 4 of them who dominate the global market. So once you tie up with one, you can actually leverage that to try and, sell your product to the other few. At least you have a story that you can build around that. But I don't know if I answered that question at all, but it is that's the constant question that I think Christoph at his time at the Capital and everyone, to be honest, has to deal with. How do you actually find the use case for a lot of the technology that is being developed and put out there?
I think that one there that you illustrated is a really nice one as well. But there's some carbon offset. I remember there was an interesting carbon offset program. It was slightly controversial. It was in Mozambique, and they were trying to work out whether creating fire breaks in the bush constituted a carbon credit or not. And first of all, that whether that actually counts as sequestering carbon or not, or just stop de-risking a future possibility, is very complex in itself. But then also it turns out that the people in question weren't actually doing what they were saying, or they did it for a bit and then didn't do it. And with this finer data that we've got now, finer data, more consistent data, then we can actually call out some of, you know, these Wild West activities of, oh, I've done such and such. Here's a carbon credit. I'll put it on the market. Like, oh, okay, did you really do that? And it's expensive to send people out to check in person, to look on the ground in all these different places, especially if they're remote, in remote areas. Whereas geospatial technology can allow that you can do that. And it goes back to that beginning of the thing. We're going to answer some of the big questions that we've got to deal with today, which is, what's the recall? What's the between what we say we're going to do and then what we actually do out there? And let's bring that gap between what's on paper and what we publish and what we report, and actually what happens on the ground, and bring that a lot closer. So I think that it's a basic, in many ways, it seems really basic. Do what you say you're going to do, or, you know, measure what matters, but we're not doing it at the moment. And that's the big, you know, that's the big opportunity.
It's interesting you say that, because that speaks to like geospatial's or satellite remote sensing's like key value prop, which is situational awareness. It's always been so easy for geo to sell into the defense sector because the product of situational awareness is so obvious, and it's kind of intrinsic to those pixels. It's like, oh, okay, that stuff is happening there. It's always been that next step, the derivative analytics, which has been so hard. But if you can boil it back down to situational awareness, which is, it's like checking your homework. Did that person do what they're saying they're going to do? Then suddenly geospatial becomes it's like a very obvious use case, as opposed to us trying to build algorithms which are much harder to do. Obviously, we need to do the algorithms too. We need to make that work, and I think that's a very important piece of the technology stack. But the situational awareness question becomes very, very straightforward for geospatial to solve. That's the crutch we've actually been leaning on for so many years, and we actually need to to some extent get off that government sort of defense-oriented crutch and start focusing on other pieces which are harder. But if we can lean a little bit on that, then it allows us to get over that business chasm more easily. So it's a great opportunity to identify for sure.
And maybe if I could just
come in
I
there.
think Beth
Oh, yeah.
wants to say something.
Yes. No,
Beth, do you want to say one
Will's-
more and then we'll switch tack?
Yeah, sure. I'll just say Will's situational awareness. I love that. But what I was going to say is that I think that's what John was raising is actually a really good use case, but it's also a use case that's kind of indirect to the work I do. So, for example, in the work I do, we would provide opinions to investors on whether or not a company that's using carbon offsets has got third-party independent verification, right? And that's the use case that you're talking about. So it flows through up into the financial sector, but it's actually linked to those projects, right, that are being invested in. So I think that's a really good lesson learned on this, is that sometimes the use cases isn't directly into finance, but it's through the investee companies that you can really achieve new things.
That's great.
Yeah,
and Nigel, sorry, I'll just tell the audience one bit of homework quickly. If you look up the Coldplay mango trees, just Google it. You'll probably see the most tangible example of what we're talking about in terms of monitoring projects as well. So Coldplay, the band, they just search their mango trees and see what you find.
And I think actually, so that goes. I'm going to rattle through some of these questions here. Otherwise, people will stop asking questions because we're not answering them. So, how do geospatial analytics services raise new questions around data governance? For example, data access and ownership, cross-border monitoring of privacy, and standardizing risk assessment methodologies. What new stakeholder relationships emerge? Charlotte, that's from Charlotte de Vaux. So who wants to stick their hand up for that meaty one?
Just to say, I think we need a lawyer for that one. Obviously there's things to be worked out on that side, right? The governance of this and data ethics is another huge topic in this space. It's not my area of expertise, so unfortunately I can't give you a robust answer to that question, but I know these types of things are being worked on for sure, usually by the sort of data providers.
Yeah,
I think the notion of data governance, I think that's very complex, but I think if we think about governance in terms of people sticking to their commitments, and I think remote sensing and sort of satellite remote sensing in particular can provide a sense of the governance of a particular project by looking at change through time. And to your point already, Nigel, did someone stick to their commitments? We can look at that from space on the assumption that they're not in the tropics and we're not limited to various different forms of remote sensing. Clouds do still get in the way, and you can do things at night still. But did somebody stick to the commitment that they made within the realms of reality? Has illegal logging diminished? Do we have more fresh water or less fresh water? We can look at questions of governance that are related to the landscape. I think so. Whether we're drawing too many conclusions from pieces of data, that might be up for question, and how that data ultimately is governed, and whether everyone has free access to that data. Those are very different sort of data governance questions. But I think it is possible to consider geospatial as a tool from which governance could be drawn, or some sense of governance could be drawn.
nice. Well, let's move on. And I don't think anybody else has got anything to jump on that particular one. I do know the only thing I can add from the Oxford Space Initiative perspective is these kind of conversations around these difficult conversations that some of the academics are looking at in terms of who owns data, the governance situation within space itself. They're looking at that into some detail, but I won't talk to it because all it will do is show my ignorance. Right, there's some good ones here. Could collaborated mapping or user-generated mapping create more distributed financial opportunities? Interesting. Has anybody come across that particular thing or thought about it in the past?
Well, I think it speaks to Will's earlier point of now it's time to have. There's plenty of opportunity in the making sense out of all the data space, and there's a specific financial tie-in to if you're investing in a set. Let's just say you're investing in independent coffee growers. Having that active participation of the sustainable growers, giving all kinds of data back to make much smarter analytics and accountability, right? So not just what you can see of how many plants that the satellites see, but what integrating that with what they're recording on the ground, both visually and geospatially. That could be really powerful and give Beth can speak better to it, but give a lot more confidence to the financial sector of what is happening on a really day-to-day, week-to-week kind of level.
It's interesting. I've seen collaborative mapping being used in the UK around something called the Slow Waves project, which was the UK's or England's littered in public pathways, and they had a collaborative group of walkers who worked together to work out the route between two towns or two villages using those different pathways. So you could use those slow ways to go from my village to the next village or my town to the next city or whatnot. And that was very interesting. So I guess how does that relate to finance? Well, at what point does that link up with, hey, how are we going to take care of these pathways? Or some of these pathways need some more looking after, or maybe we want to turn some of these pathways into bikeways. How do we finance that? So then there becomes a kind of an interesting link there. But otherwise, I haven't seen, I mean, the importance of indigenous groups mapping out where they are and using the geospatial technology to map out where that is and where their historic movements have been, especially in environments where the planning and legal frameworks are very loose, are so important, especially when there's a bit of a land grab going on at the moment of large institutions who want to have own woodland to say that they've offset their carbon. And quite often they go into places where people don't have the paperwork to say they've been there for generations in time immemorial, but don't have that paperwork to say that they have. And somebody can rush in and say, well, this is ours. I think that in itself is an incredibly important tool. And I know that there's lots of NGOs that are using that tool at the moment to try and defend people against that sort of land grab. But in terms of, exactly how that moves to the financial side of it, I can see possible futures where it might do, where it's deemed that the classification of carbon capture or biodiversity credits and whatnot, there's a more nuanced take on it, and it's looking at people who are protecting a particular ecosystem, not that particular narrow construct of a carbon credit. Yeah, I mean that is a feature I would support.
I think also
how
that
it comes about.
It just reminds you that there's these regulations that are coming in the EU, and Germany's already passed it, where companies are going to have to, they can be impacted if there's human rights and violations uncovered within their supply chain. Then they can get GDPR style fines for even if it's off their supply chain and not in their direct control of management. So these things are becoming sort of increasingly material from a financial perspective through the lever of regulation. So all that work those NGOs are doing is important and could be the trigger to make it more financially material.
Nice.
It's probably worth noting as well, just in this discussion, it's hard to talk about collaborative mapping without mentioning OpenStreetMap, which is, allows organizations to compete in a sort of geospatial manner against our friends at Google, who put billions of dollars into mapping every single year. You can spin up OpenStreetMap and you have a pretty good map of large amounts of the planet effectively for free. That in combination with half the world's population having a GPS in their pocket in some manner, conceivably allows startups and technology companies and financial companies to have probably the world's biggest field survey team if they leverage it in quite the right manner. So you have to ask the right questions and provide the right incentives, but 3.5 billion people is a lot of people to leverage if you can do so effectively. So there are from a capabilities perspective, I think collaborative mapping holds a lot of promise. And to Beth's point, maybe there's opportunity to sort of test those supply chain sort of human rights violations in real time, and to make sure that commitments are being held to, not just from satellites but from other means too. So I think there's opportunity there. I'm not sure if it's been readily realized by the spatial finance community as yet.
With that in mind, has anybody seen geospatial technology being used in a litigation? To support litigation in terms of connected to climate mitigation?
So I don't know if I've seen it directly, let's say whether the geospatial case or the data has been used in court or something, but I think that's one area where there's actually an awful lot of potential, particularly when you look at kind of historical data and the underlying activities that have been driving these are becoming more and more, I don't know how to say it, suable, litigatable by law kind of things. There's kind of the climate litigation side, which is growing, like different types of actions or historical emissions that become that actors are being sued against because they don't line up with commitments under this or that. So that, you know, the theme is growing, and once that theme I think is growing, the data can be quite powerful to support some of these cases. From climate, maybe, although that is quite a different thing, typically is linked to emissions and stuff. But I think particularly when you look at kind of local environmental impacts, or when nature and biodiversity is going to become increasingly hot on the topic, or when some of these deforestation pledges come into play, or law, etc., then I think you get some really powerful tools to support these cases. I have seen mainly NGO-driven kind of use cases where they've used Earth observation data to demonstrate that, let's say, a mining company actually destroyed a whole bunch of natural capital or local forest, whatever, where they said they wouldn't, and in court they have been denying that they were doing this. And these smaller communities who don't have, I don't know, in theory, the means to fight back against it, has been working with this NGO and a kind of not-for-profit, I think, mapping agency to actually provide the historical imagery that said there was a forest here initially, now it's gone, we can see it because the mining company was denying it, and kind of won a case in that way. But that's kind of relatively, I guess, small and localized on these environmental things, which is probably happening a lot more. So I think litigation risk is super interesting, but I think even as a kind of climate litigation as a field is relatively new. It's growing rapidly, and as it grows, the data can help support it. The geospatial data can help support it, but it's an interesting one.
And that comes back down to if you can use it as data to support litigation, then it becomes an area of interest from a legal or financial a legal, financial, and reputational risk perspective, and something that should be on the table as a financial investor or asset manager when you're looking at things. And so that brings it. So we've had some interesting announcements at COP through deforestation, but also on methane, limits on methane. So two questions here. First of all, did that immediately, were you excited about that particular development? Could you see the direct application of your services and the technology for those two promises? Is that something that Geospatial can solve around, monitoring methane? As well as deforestation, which I think we all know is possible, but definitely on methane, I'll be interested to hear.
Yeah, I can talk a bit, Nigel, at least on the agriculture side of that, because and first of all, I totally agree. Methane is just totally gone up in the agenda. I was told about this term demethanization a couple of weeks ago, which I'd never heard about before, but maybe that's just my ignorance. But anyway, I think, around 12%, I believe, of methane emissions are attributed to rice production. And especially the open paddies, when you have constant flooding, essentially, microbes release methane. And I guess the two good things, relative good things about this in terms of mitigation solution in a way. Firstly, we know what practices can, stop this essentially, right? And secondly, it's observable from space, right? So I think that's, probably one of the clearest opportunities, I guess, from remote sensing anyway, for, being a facilitator for, the so-called demethanization, going forward.
Yeah, that's interesting.
Let me.
Carry on.
I think something to add on top of what John was saying. I think in both, let's say, methane and deforestation, there's increasingly, let's say, geospatial capabilities to track and monitor that. But if we want to use finance as a lever to hit these targets, we need to be able to attribute this deforestation and methane to the economic actors that are causing it, and that have that the financial institutions have exposure to. And that comes back to some of the earlier questions on, I think, some of the data layer that's arguably missing, or that's maybe hard to find, is that kind of asset level data that ties assets or supply chains to their purchasers or their owners. And it's only until we solve that or do that at scale and openly, then I think we can really bring to bear the, you know, the wealth of information that's coming down from satellites, which is all well and good. But until we know, you know, until we can attribute what we're seeing on the ground to the organization that's responsible for it, then also the financial institution doesn't have the leverage, or, you know, doesn't even know how to go about trying to address this. You know, and a policymaker, let's say, it's a whole different use case. So I think technology-wise, the tools are there. I think the question is indeed, what do you do with the data, and who do you need to give it to when, attributed to the right economic actors to actually make sure that these commitments take place.
And yeah, that's very interesting. Christoph, yeah, that's very succinct.
Sorry, Nigel, just, you know, and actually it's a remiss for me to forget the industrial applications, you know, of the satellite imagery as well. Obviously, our good friend, Adina Gillespie, who I think is very familiar to people in the Spatial Finance Initiative, you know, so GSG-SAT, obviously, a clear application, you know, monitoring particularly point sources of methane from industry, the energy sector as well in particular, and also now I believe they've announced they're looking at methane emissions from landfills. So again, even from an industrial and point or open source, you know, potentially emitter of methane, you know, satellite imagery again has another clear use case. So, you know, just worth mentioning as well.
Interesting. Well, look, shall we? I'm going to pass over to Mark Ventresca just now and share a couple of slides through him. But look, thank you everybody for fielding some in-depth questions, B, some technical questions, and then some ones which you were all very sensible in saying we don't know. you kept your integrity, reputation by saying I just don't know. So no, thank you so much, and all of the thank you so much for all the preparation that you put into the joining the panel and your presentations beforehand. But right now, I'll pass you over to Mark, who's got a few words of wisdom.
Thanks very much, Nigel, and thank you, panel, and all the people who've written in with questions. I am really happy to make a few comments, and I'll end quickly so that we have time for a minute from each of the panelists for our closing, a last question at our 3:15 close time. So, Nigel, if you pull up those slides, I just want to. I think the panel was excellent. Appreciate the time and effort everyone put in. I also think the questions raised many issues around what's an asset, around the implications of second and third order impacts, around the kind of questions around open source data privacy. And I want to really focus my comments on that proliferation of possibilities. Nigel, if we go to the next slide, you know, I heard in the core of the panel, I heard three colleagues speak to this idea of spatial finance. This is Christoph's work, new forms and volume of data, meet analysis, especially artificial intelligence, to inform and extend risk analysis and reporting and more. So at the heart, this is a story that says, this panel is a story that says, spatial finance, this insight from our colleagues at Oxford to begin to use geospatial data to extend, redefine, clarify, focus, make more precise a number of financial tools, whether it's risk analysis or reporting, or as Christoph said several times, the layering of asset data. I think that's important. I think Beth gave us a view from a key intermediary and the work that she and her colleagues are doing, what they're calling Sustainable One. And then Jean-Pierre gave us from his work at Geotree and earlier work he's done, again, a story about Earth observation AI to revolutionize the way nature-based solutions are monitored. So the core of the panel was saying geospatial data makes possible a number of initiatives. And as I said, the questions were especially interesting for the plurality of directions they went, the second and third and fourth order implications. And I think, Nigel, as you just said, the right answer is we don't know right now, right? It's a world that's in formation, it's a world that's in motion. And that's probably worth remembering. I'll mention here a quote I often use, and all of you know, from William Gibson: the future's already here, it's unevenly distributed. I think that's the state right now of the intersection of space and finance and climate. There are many futures around us, there are many possibilities, and we're seeing people like Jean-Pierre and Beth and Christoph and our colleagues at Oxford are helping to shape and make those worlds. So the takeaway point there is there's no inevitable future for spatial finance. There's no single way that's going to go. It's deeply embedded and deeply contingent. And we know literally scores of ventures, alumni ventures coming out of Oxford, and similarly scores and more ventures from many institutions, many funding sources around the world today that are experimenting with this, the intensity of new kinds of data, both volume and forms of data, and then bringing that to more familiar forms of financial analysis and risk analysis, and then creating initiatives like Geotree, which are focusing on particular areas. And even today in the panel, we've heard people talking about migration, agriculture, climate change, nature-based solutions, many, many areas where we're going to see specialty domains and specialty expertise develop. Next slide, please, Nigel. The other issue we saw a lot was this question of the growing geospatial analytics market. Here I'm taking from Will and his work at Sparkgeo, some of our other alumni, Little Place Labs, Bosco Lai, and really the work of Josephine Millard, who's a venture analyst, head of research at Seraphim Capital. This slide just says, you know what, we don't know what's going to happen with satellites. There's an enormous amount of data happening. There's more and more data happening, and that raises all kinds of interesting issues that will help to structure that space and that market and those industries. I think Laura mentioned some of these issues. When we celebrate the rise of spatial finance and the amazing amount of data and the potential that creates for new kinds of financial analysis, we also have to think about space debris and the impact of all those satellites being launched and the congestion that's creating. And again, the lack of rules of the road. So questions of governance are core here. Nigel, the next slide. Again, just Josephine Millward really is someone who's following carefully. She said something that I think Will mentioned and that Nigel mentioned. The quote I love from Josephine is, customers want more insights, not more pixels. Will, I think in his work at Sparkgeo is at the heart of this question. There's an enormous amount of data flowing. Data is not information. Pixels are not information. And so we have a whole set of intermediary ventures coming together using AI, using machine learning to try to turn that massive volume of pixels into data, into information that can be used. And this slide, Josephine just identifies a number of key contingencies that will be resolved in this emerging industry way before we even get into the spatial finance issues. Just literally, what kind of data are we going to see? How is it going to be processed? And that raises the questions that Laura and Beth both raised for me, and several of the questions raised: data security, open data or not, cyber issues, all the issues around speed of transmission and forms and modes of transmission of data from satellites to Earth. And so then I'll just end the last slide, Nigel. Just put in here what we're doing at Oxford Space Initiative. I think that the issues that we're looking at are mapping well onto the issues the panel raised. First, how is the space vector ecosystems, how are they changing? Many new kinds of actors, new kinds of purposes, public and private, commercial and other, the microstructure of relationships and leverage. I think Laura's comments were especially helpful in reminding us this is all happening in a context. The social sciences and sort of broadly those issues around ethics and governance are lagging the pure drivers of technology. I think Laura's also really mindful of reminding us that we too often have a reliance on there's going to be a technology, there's going to be a solution. And I think her comments are instructive to remind us it's always ramified, it's always complex, it's always many issues that have to be grappled with concurrently. I see the sun has just risen on my face. Sorry for the weird sunlight that's percolating in here. Second is how to govern the sector with all these legacy agencies and firms, and then the new kinds of activity. I think the rules of the game, the governance issues, what Ostrom called governance of the commons, I think is a critical issue. And I think we heard that in the panel today. And then finally, some of the work we're doing on evolution of new markets for geospatial analytics. Again, technologies matter. They always require complementary assets. There are all kinds of issues around open source and privacy. And then critically, the role of intermediaries. That's where I'll stop. The role of intermediaries here, we forget. Almost everyone on this panel represents one or another kind of intermediary who will, by their actions and strategies and choices, help to shape and stratify and structure this new world of space, spatial finance, space and data, spatial data and finance to take on issues of climate change. So let me stop there. I think we've got 4 or 5 minutes left. If everyone just wants to give us a 20-second or 30-second quick closure. Nigel, if you want to kill the slides. Yeah, we'll just let everyone maybe just start with Beth and go around to Jean-Pierre, and then Will, Laura, and Christophe, and then Nigel, last for you. So Beth, for you, 20 seconds.
Yeah, sure. So just, I guess, to close out from COP, I think there are use cases for satellite information to help spur on not only just our climate goals, but also our SDGs. And I think, figuring out where those use cases are throughout the economy is really the work we need to do immediately, because there's a lot of urgency in terms of solving these issues.
Super, thanks, Beth. Jean-Pierre, how about you?
Yeah, I think it's an exciting time to be in this space, especially for us who are in the data analytics side of it, because we're going to have a whole stream of upstream satellite data coming down to us in the coming decade. And plus, we're now seeing the applications, especially with the climate commitments ramping up. So exciting time to be in this area of spatial finance.
Jean-Pierre, thank you. Laura, how about you?
I would say that it is it's worth remembering, or worth really stepping back and appreciating that we're at this extraordinary 30 years of life on this planet and as a species, right? We both have a very concerning ticking clock around climate and planet degradation here on Earth. And we are becoming a starfaring species. And so those out there in the audience who think space is someday, it is not someday, it is happening. And you're either a part of how it happens and what best practices we put into place, and what can be, there's a wonderful confluence of the best practices that have to be experimented with quickly and put into place around climate action, and how we approach additional exploration, right? Like, how can we not bring all of our terrible mining practices with us into space, and all of our terrible internecine wars into space? All of that affects planetary stability, which all, right? So there's I would expand, if I call space or near space the ultimate innovation lab, I would say this huge amount of resources and attention around the climate crisis expands that innovation lab. And it is a loss not to wrap around both. And man, all hands on deck. Let's bring the brain trust to the planet.
Super, thank you. Thanks so much. Really powerful words. Christophe, how about you then, Will?
Yeah, I think indeed there's such an urgency for the climate and nature and other crises. We have a financial services sector with a wealth of use cases basically there. I don't think they're lacking. They just don't directly say or map onto we need space data for this. So I think the given the urgency and given what we know the capabilities of our sector are, it's time for us to step out, for the space sector to step out of the comfort zone and be more proactive and go and find these use cases and address them and translate it in ways that make sense. And also remember that space data is only one piece of the puzzle, right? It's valuable and it's super cool because it's global and consistent, etc. But to make financial capital allocation decisions, risk management decisions, whatnot, you need an awful lot of other information as well. So we cannot do this alone. We need to work with intermediaries. We need to fit and integrate with other data sets. But we have an important role to play, and we can play it if we're proactive in engaging and working out what they need rather than what we can offer.
Christophe, thank you. That's right. Thanks so much. And Will, last comment?
Yeah, I think everyone said everything already. So all I'm going to do is say this is probably the most pressing concern we have as a species. Climate change, COP. We need to be really on it. And the geospatial sector has probably the most compelling toolkit for the measurement, stroke monitoring, stroke management of our impacts on the planet. We just need to have the appropriate conversations to turn those tools into actual machines that provide answers. So I look forward to being part of that discovery process, and I would welcome other people also to be part of that process too. I think we have a lot of work to do ahead of us, but it's exciting work and interesting and important.
Well, thank you very much. And let me add the last 10 seconds just to thank Nigel Greenhill, who brought us together, who actually found the opportunity, brought us together, and has done an enormous amount of work to make this happen, along with our colleague at Oxford, David Lehman. So Nigel, thank you very, very much for a great session, great monitoring, and a great panel, really remarkable people. Thank you.
My pleasure. Lovely to work with you. Have a great day, everybody.
Thanks, Nigel. Thanks, everybody.
Take care.
Thanks, Nigel. Thanks, Mark. Thanks, everyone. Bye.